Hello, my name is Ali Malik, and I would like to welcome those listening a warm hello. This is the first episode of Hudson Institute's South Asia Center's Expert Series. This episode will cover three major topics: China's domestic economy, China and its relationship with South Asia, and China's disputes within the Pacific and its One Belt, One Road initiative. Today, I would like to welcome Gordon Chang. Mr. Chang is the co-host of The John Batchelor Show and has authored books on China and its neighbors. He contributes regularly to Forbes.com, The Daily Beast, and the World Affairs Journal. Additionally, he has appeared on CNN, Fox News, the BBC, and The Daily Show with Jon Stewart. Welcome to the South Asia Center at Hudson Institute, Mr. Chang.
Thank you so much. Well, Beijing's National Bureau of Statistics says that China's growing at a 6.7% pace. I think that, and you look at the financial community, there's a consensus that it's probably 3, 4, maybe 5%, but some people say lower than that. But whatever rate the Chinese economy is growing, it's not growing fast enough. And the reason is that even if you believe 6.7%, and I don't think you should, but even if you believe it, China is creating debt 4 times faster than economic output. Now they can do this for a little while, but I think that this is unsustainable. So let's say China's growing at 2, then that number goes up. And I don't think that right now Beijing has a way to figure out how to get out of this. They now have fiscal stimulus, they've got infrastructure building. All of this is creating debt, and eventually it's going to have to be repaid. And one of the worst things about all of this is that China owes this debt to itself. And when you look back at history, the worst financial crises are those where countries owed money to themselves, not when they owed it to international banks. So I think Beijing is going to have a really big problem with this adjustment that eventually has to occur. I actually think that China will achieve this transition. If you look at the numbers for 2015, services constituted 50.5% of GDP. But that's not really because services grew a lot. You know, in reality, last year, China's manufacturing sector contracted somewhere about 3 or 4%. So just by arithmetic, it means that the services sector's got to grow as a percentage of the entire economy. We know during the third quarter, there were real problems in China because financial services are a large component of services overall. In order to prevent stocks from falling after the June crash, they instituted a number of measures that kept prices higher than they otherwise would be, but they did that at the expense of volume. So for instance, we've seen the futures market volume fall 99% in the space of 2 or 3 months in the third quarter. This is going to be a problem for China. They're going to have a problem growing the services sector. But as a percentage of the economy, yeah, that will occur. But it will occur because manufacturing will stumble and continue to stumble. Beijing doesn't have a solution to the problem. Right now, the only thing that they can do to keep GDP going is really fiscal stimulus, and that really means infrastructure building. Oxford University's School of Business did a study which was released a couple days ago, and it shows that over the course of the last 3 decades, more than half of the infrastructure did more harm than good. In other words, it's underutilized. Eventually, you're going to have to pay back the cost of this infrastructure. And that really means that this is going to be very difficult for Beijing. It's not just ghost cities, it's high-speed rail lines to nowhere. It's not to say that they're not getting any benefit out of this infrastructure, but not enough. So this is a problem. And I actually don't think that they really can get to change the basis of their economy. So they're just pouring fiscal stimulus in the absence of any other strategy. Eventually it's going to come back to haunt them.